Cross currents of earnings news drift over Wall Street today. Some good results, some not so good. But traders found little clear direction, and stocks end the day pretty much where they started it.
Crude oil prices crept back up in a bit of trading in New York, but those prices are down sharply for the week and the year. Still, that's not worrying the experts who keep an eye on oil company stocks.
China takes a step that alarms nations around the globe, using a missile to destroy one of its own satellites in space. The move rattles U.S.-China watchers who worry it could chill what had been a warming economic relationship between the two nations.
And tonight's Market Monitor guest says he's worried about Wall Street because corporate insiders are dumping their stock holdings. He's Robert Drock, publisher of the Drock Weekly Research Report.
I'm Paul Kangas.
And I'm Susie Garrett. This is Nightly Business Report for Friday, January 19th.
Nightly Business Report is made possible by
Is your nest egg in shape for retirement? Objective financial advice can help. A.G. Edwards, for more than 118 years, fully invested in our clients.
Franklin Templeton Investments, providing a unique perspective through the specialized investment expertise of Franklin Templeton Mutual Series and Fiduciary Trust. Franklin Templeton Investments, gain from our perspective.
This program was made possible by contributions to your PBS station from viewers like you. Thank you.
Good evening, everyone. Wall Street struggled today with mixed earnings from two leading blue chip companies, Citigroup and General Electric. Shares of Citigroup rose slightly, even though the company's quarterly earnings plunged, while GE posted strong quarterly results, but its shares tumbled almost 3%. The giant conglomerate earned 64 cents a share, right in line with estimates. Revenues rose 11% to $44.6 billion, also stronger than expected. The company's restating earnings for the past 6 years to fix an accounting issue that'll trim $343 million off past earnings. Wall Street is split on the outlook for GE, even though the company is forecasting growth this year of 10 to 12%. But Standard & Poor's analyst Richard Tortoriello upgraded GE stock today to a strong buy.
I think that GE has turned the corner where it had 4 years of basically flat profit growth if you look at non-restated earnings. And now it's actually starting to show good internal growth, 9% internal growth this past year.
Meanwhile, Citigroup earned $1.03 a share in the fourth quarter, 3 cents above estimates, but down 33% from the same period a year ago when it realized a big gain from the sale of its mutual fund business. Revenues rose 15% to almost $24 billion, but expenses rose even faster, up 23%. Citigroup CEO Chuck Prince said today that disconnect is, quote, not satisfactory, and the firm is engaged in a, quote, long-term rebuilding effort.
Colder temperatures in the Northeast today sparked a slight recovery in energy prices. In New York trading, crude for February delivery surged 3% to close just shy of $52 a barrel. Still, oil prices are off sharply this year, and the sell-off is pressuring oil stocks. Suzanne Pratt looks at the environment for big oil shares in 2007.
Since the start of the year, most oil shares have gotten clobbered. It's no wonder, considering crude oil prices are off nearly 15% in 2007 and 33% from last summer's high. An unusually warm winter has helped to dampen energy demand, and now supplies are likely to remain abundant, no matter what happens with Mother Nature. Amid that backdrop for oil prices, investors have been questioning whether major oil stocks are still a good bet. Oppenheimer analyst Fadil Gates says he's currently neutral on the oil sector because he's concerned oil prices remain inflated.
Despite the sharp drop, there's still more premium in oil prices. And if we don't have any global crisis, if demand slows down for any reason, I think there is more room for oil prices to go lower.
Oil companies still make oodles of cash even if oil prices are at $50 a barrel. But the movement in oil shares is strongly linked to the direction of energy prices. Monness Crespi oil analyst Sal Alakwa says many oil shares may hold up better than you might expect because not all oil stocks climbed as quickly as energy prices.
Now with prices coming down, there'll be an impairment to earnings, but I don't think that stocks will go down as much as you might see earnings go down, at least at this stage.
In general, analysts say the larger oil companies can weather falling crude prices better because they can produce oil for less money. To that end, Oppenheimer's Gate, who owns shares of ExxonMobil, says that company is in the best shape to cope with falling oil prices. On the other hand, he says ConocoPhillips stock will be hit hard if oil prices continue to fall. If prices rebound, Gate, who also owns Conoco, likes its prospects.
If industry fundamentals improve, ConocoPhillips probably could gain the most. It is also the cheapest company in terms of valuation.
Analysts say oil prices would have to fall to $40 a barrel before the outlook for big oil would get really worrisome. Even though oil companies still make money at that level, it would definitely spook investors. Suzanne Pratt, Nightly Business Report, New York.
The flow of corporate earnings, good or bad, had little impact on Wall Street this morning as the market waffled about what direction to take. At the outset, the Dow fell 18 points, NASDAQ slid 5, but by late morning, they were up 11 points and 7 points respectively. A midday sell-off was mostly wiped out by a late rebound in the recently weak oil and tech stocks, so the Dow Industrial Average closed off just 2.40 at 12,565.53 today. In this four-day trading week, it rose once and fell 3 times, still at a net gain of 9.45 points. The NASDAQ Composite was up 8 1/10 points today at 2451.31. It also gained once and fell 3 times this week, but it lost 51.51 points overall. Standard & Poor's 500 index rose 4.13, ending at 1430.50 today. Over the bond market, the 10-year note fell 8/32 to 98 and 25/32, putting the yield at 4.78%.
A surprise today for military analysts, news that China successfully tested an anti-satellite missile to destroy one of its old weather satellites. The test not only raises concerns about a Chinese military presence in space, but also threatens to set back recent progress made in U.S.-Chinese relations. Washington Bureau Chief Darren Gersh reports.
It is not just that the Chinese tested a missile that could be used against U.S. military satellites, it is also how it was done, without any notice or explanation from Beijing. Arms control expert Jeffrey Lewis calls the Chinese decision to launch short-sighted.
This is a test that's reckless in the sense that it is a debris-creating event that threatens the peaceful use of outer space, and it's stupid in the sense that it is self-defeating and ultimately compromises the long-term interests of the Chinese nation.
At the very least, analysts say the test set back by years of promising move towards U.S.-Chinese cooperation on commercial and civilian space exploration. Washington State Democrat Rick Larson co-founded a bipartisan group of 40 House members working for better understanding in U.S.-China relations. He says the test will increase concern on Capitol Hill over China's true intentions.
China has destroyed this aging satellite with an anti-satellite weapon. I hope that test doesn't result in destroying a strategic economic dialogue that we're starting to have with China.
Treasury Secretary Henry Paulson launched that dialogue just last month, heading a high-level delegation to Beijing. A Treasury spokesperson tells Nightly Business Report, while we're concerned about the recent action by China, we have a wide-ranging relationship with them that is active on many fronts. But critics are already using the anti-satellite test as a reason to take a tougher economic and military line with China. Dean Cheng is an expert on China's space program.
Folks who are concerned about China as a military threat, economic threat, outsourcing, all of those folks are going to be using this test as an example of how economic relations do not lead to a more liberal, democratic, safer China.
Cheng says China presents a unique challenge to the United States. It is both a major trading partner and the only country other than the United States that has shot down a satellite. Darren Gersh, Nightly Business Report, Washington.
On Capitol Hill tonight, the big question is, what now? House Democrats have wrapped up their big legislative push for the first 100 hours of the session, passing energy and minimum wage bills, among others. So where do they go from here? As Stephanie Dew reports, it appears global warming and energy independence will now take center stage.
Speaking at the National Press Club, congressional leaders made a preemptive strike today ahead of the president's State of the Union address next week. House Speaker Nancy Pelosi says she hopes the president will work with them on energy and environmental goals.
But we cannot afford to wait. Therefore, with openness and the participation of all parts of our democracy, we will pass groundbreaking legislation that addresses global warming and energy independence.
There may be some common ground. President Bush is expected to propose renewable energy solutions to climate change in his speech Tuesday night. Senate Majority Leader Harry Reid says Congress is already focused on renewable power from sun, wind, and biofuels.
We are oil hogs here in America, and we've got to lessen our dependence on foreign oil. And it can only be done by recognizing we can't produce our way out of our problems, and we have to move to alternative energy sources.
But the goals of increasing energy security and reducing emissions can be at odds, says Jason Grumet with the National Commission on Energy Policy.
In fact, almost everything that's good for climate change is also good for energy security. The inverse is not always true. In particular, if we rely on our tremendous coal resources to make diesel fuel, that would be good for energy security, but disastrous for climate change.
Already in the works on Capitol Hill are several climate change bills that would cap industrial carbon dioxide emissions. That's an approach companies from GE to BP have already embraced. With several states and local governments imposing their own emission limits, Grumet says many businesses are now endorsing federal action.
They want to have a role in designing what happens, not be on the outside complaining and basically, being handed a set of goods that they had nothing to do with.
On Monday, some of the nation's biggest companies will weigh in on what happens, announcing their recommendations to quickly address global warming. Stephanie Dew, Nightly Business Report, Washington.
Now let's take a look at some stocks in the news tonight. Most active New York exchange issue on 31 million shares was Motorola, moving up 56 cents a share. Fourth quarter earnings out today, 26 cents per share. That was a penny above the street consensus. Motorola also said it plans on cutting 3,500 jobs. General Electric down $1.05 despite that higher earnings statement. And then came Ford Motor with a 12-cent gain, followed by Pfizer gaining a nickel. IBM, a real drag on the Dow today. It cost the Dow Industrial Average 26 points with that loss of $3.25. IBM's earnings were sharply higher yesterday, but a lot of analysts are concerned over the company's hardware sales. ExxonMobil reacting to that rise in oil prices, up $1.57. Then Sprint Nextel edged up 2 cents. Citigroup, despite the lower earnings, up 11 cents. Time Warner, 34-cent drop, and AT&T, 10th in volume, was up 1 nickel a share. Alcoa, a Dow stock, gaining $1.10. The company's board of directors has approved a buyback of up to 10% of the company's common stock. That would be about 87 million shares. Alcoa will also boost its annual dividend from 60 to 68 cents a share. Daimler Chrysler gained $1.68. Morgan Stanley upgraded it from equal weight to overweight on the promising growth prospects of the company's truck division. Then the big oil service company, Schlumberger, up $3.10. Fourth quarter earnings out 92 cents, 7 cents above the street estimate, well above last year's 54 cents, and revenues jumped 33%. The company gave an upbeat outlook on this year, and Standard & Poor's repeated a strong buy. A lot of good news there. Stanley Works down 97 cents, traded as low as $52.44. J.P. Morgan downgraded it from neutral to underweight. And the golf company, Callaway, up $1.67. Company sees better than expected 2006 sales coming in around $1.02 billion, and earnings will be around 50 to 52 cents, well above the street estimate of 39 cents a share. Lamson and Sessions gained $1.35. The company's largest shareholder wants the firm to hire an investment banker to explore the sale of its PVC pipe business or perhaps the entire company. ITC Holdings up 338, positive reaction on the company's plan to buy the transmission assets of Interstate Energy, priced $750 million in cash. Apple Computer topped the NASDAQ active list, losing 57 cents. Google up $1.92. Microsoft 11-cent gain there. Cisco up 25 cents. Research in Motion bouncing back with a gain of $2.61. Intel 17-cent rise there, and eBay rose 15 cents. Yahoo 48-cent drop. Qualcomm gained 38 cents, and Applied Materials down 4 cents a share. Coldwater Creek, the women's apparel retailer, cut its fourth quarter earnings guidance from 26 to 27 cents all the way down to 16 to 7 cents a share. The street was looking for 28 cents a share. And then JDS Uniphase up $1.53. The company boosted its second quarter sales guidance from a low of $332 million to as high as $365 million. And Whittier Energy up $1.98. Sterling Energy PLC, a British firm, will acquire it for $11 a share in cash. Those are the stocks in the news tonight. Susie?
Paul, looks like XM Satellite Radio will have to face the music in court. A federal judge ruled today that a group of record companies can sue the satellite service over the issue of recorded music. Some of XM's radio receivers allow consumers to record and keep songs. The record companies, including Atlantic, BMG, and Capitol Records, say that cheats them out of royalties and infringes on copyright protection. But XM disagrees, saying the suit is without merit. It believes it's protected by law in allowing consumers to record its programming.
Monday, drug maker Pfizer takes the wraps off a major restructuring plan, hoping to boost sales and save money.
Here's a look now at what's happening next week. Our Friday Market Monitor guest is James Stack, president of Investec Research. Events to watch for next week. Monday, the Conference Board releases its leading economic indicators for December. Tuesday night, President Bush delivers his annual State of the Union address from Washington. Wednesday, the government's latest take on energy supplies. And on Thursday, it's December's existing home sales. Also, it's a busy week for earnings. Dow Components, Johnson & Johnson, McDonald's, AT&T, Microsoft, and Caterpillar are scheduled to report.
My guest market monitor this week is Robert Drock, publisher of the Drock Weekly Research Report based in Tallahassee, Florida. Bob, welcome back to Nightly Business Report.
Good to see you again, Paul.
Last July, on your last visit with us, the Dow was struggling at the 11,000 level, and you said it would head much higher as soon as the Federal Reserve stopped raising interest rates. Well, the Fed just did that, and here we are above 12,500, and that was a good call. I compliment you.
Well, thank you.
Now, however, a lot of economists are predicting a Federal Reserve rate cut, but the economy really isn't slowing down that much, and inflation is of concern to the Fed. So how do you see this scenario unfolding?
The Fed data that was important in July with their August cut is not a factor anymore.
None?
No, I would not be concerned about the Fed till next March or April. But right now you want to be concerned about corporate insider selling. Fed data, we got the elevation from the Fed.
Mm-hmm.
Now we have this corporate insider selling's come in, and we got little froth. So I wouldn't look for the Fed. I'd look for a correction from those data sets. And not the Fed.
How accurate is an increase in insider selling as far as predicting market movement?
It depends on what else is going on, but it's usually a 3 or 4 month lead.
Mm-hmm.
And that data got big in December. It's just a caution time. I'd love to be bullish like I was in last
July,
time we spoke.
yeah,
But
right.
it's time to take a little money off the table, I think.
How big a decline do you think that this might precipitate?
Usually they're soft, but you don't know until they start.
Mm-hmm.
And the Fed might not be able to bail them out. You have a flat yield curve. Fed could lower rates and long-term rates could go up anyway, so don't count on Papa Fed.
But anyway, it's a time for caution, is what you're saying.
It is a time statistically to be.
Now, as many of our viewers know, you manage Nightly Business Report's model investment portfolio. Let's see how you did with that in 2006 overall. And there we see the Dow Industrials actually beat you out last year. That's the first, I think.
Every once in a while, they'll get ahead of us, but overall, we get ahead of them more. We had a rough first half, actually.
Now let's see how the model has done since its inception under your management back in 1995. And there's a little different picture. Your portfolio is way up, 315%.
We beat them more than they beat us. So.
Yes, you do. Anyway, I compliment you on a great job. We appreciate the time you spend on our model.
Thank you.
Going back to July of last year, you had 4 stock recommendations. Let's see how they've done since then. Let's start with the first two. Dollar General up almost 21%. McCormick up nearly 12%. Good calls there. And let's have a look. I think there were 2 more. United Health Group up 17% plus, and William Wrigley an 11.3% rise. All winners. And are you still with them?
Some of them we've gotten rid of and added different ones, but pretty much the same. The thesis is quality stocks that are discounted, and that's why we have.
But you're taking some money off the table in those 4.
I think you should do that until March or April. Why not?
Okay.
That's your risk period.
Bob, given your guarded market outlook, are there still some stocks that you would be buying?
You can look. You want high-quality depressed stocks like Walgreens.
Okay, there's a chart of it right there. It's had a bouncy time of it.
Commerce Bank shares.
Let's have a look at the chart on Commerce Bank.
These things should all kind of look kind of down. You can see they're off their highs.
Yeah, you like that?
Yeah, I don't want anything high.
Okay.
Universal Forest Products. This will look better to you, this one probably. See,
Oh,
that
boy.
really looks bad.
Oh, my goodness.
We
Look at
like
that.
the worse they look, the better we like them when we buy them.
Seems to work.
And Expeditors International.
That's a NASDAQ issue as well.
But I would like to make clear the caveat that this is not an entry point.
Okay.
They can watch the web and they'll know, but it's dangerous here for the next month or so.
This is sort of like shopping and putting these in your cart but not going to the cashier
it's
yet.
run up a little bit too much. Your earnings have not kept pace with the rise in stocks.
Understood.
Your price-earning ratios are going up.
Okay.
It's just a warning time.
Bob, do you personally own any of the stocks we've been discussing tonight?
No, that's purely educational.
Okay. I want to thank you for being with us once again. We'll look forward to your next visit.
Well, thank you, Paul.
My guest, Robert Drock of the Drock Weekly Research Report.
Recapping today's market action, a mixed day on mixed reactions to a batch of mixed earnings news. The Dow fell 2 points and the Nasdaq rose 8, breaking out of its losing streak. To learn more about the stories in tonight's broadcast, go to Nightly Business Report on pbs.org. You can also email us at nbr@pbs.org. Tonight's commentator says there's something missing from the debate over immigration. Here's Myron Kandel, president of the New Hampshire Initiative for Corporate Responsibility and Investor Protection.
Immigrant is a fighting word in some quarters these days. To many people, it's a pejorative, as in those blankety-blank illegals who are threatening the foundation of our country. Sure, our immigration policies need fixing, and the subject of illegal aliens is a hot-button issue. But I will leave that to others. Tonight, I want to discuss one usually overlooked aspect of immigration. It's the contribution that illegal immigrants to the U.S. are making to our country's leadership in an increasingly competitive world. A new study by researchers at Duke University's Pratt School of Engineering and the University of California, Berkeley has found that immigrant entrepreneurs have become a driving force in the formation of new businesses in the nation. The figures are startling. Of all the engineering and technology companies started in the U.S. from 1995 to 2005, 1/4 had at least one foreign-born founder or co-founder. These companies employed 450,000 workers and had $52 billion in sales in 2005. The study also estimates that last year, foreign nationals living in the U.S. were the inventors or co-inventors of nearly 1/4 of all the U.S.-based patents filed internationally. That figure has more than tripled in 8 years. So in the debate over immigration, let's not forget the contributions legal immigrants continue to make. I'm Myron Kandel.
And that's Nightly Business Report for Friday, January 19th. I'm Susie Garib. Have a great weekend, everyone. And the same to you, Paul.
And you as well, Susie. I'm Paul Kangas, wishing all of you the best of goodbyes.
Nightly Business Report is made possible by
Franklin Templeton Investments. Our unique perspective helps us see domestic and international markets in a different light. Franklin Templeton Investments. Gain from our perspective.
And by A.G. Edwards.
This program was made possible by contributions to your PBS station from viewers like you. Thank you. For more information about investing, you may order Nightly Business Report's home video, How Wall Street Works, by calling 1-800-535-5864. This program is available in either the VHS or DVD formats.
I am PBS.